New Zealand is heading towards the longest house price crash on record, and if you bought at the top, your home could be worth 31% less. That's hundreds of thousands of dollars gone, wiped off the wealth of the average homeowner. But when could house prices finally start going up again? To find out, I went and got the latest forecast from every major bank in New Zealand, and we're going to see what their predictions mean for you, the average homeowner, so you can know when and if your wealth will ever go up again.
Let us not sugarcoat it. This property market downturn has been, or is about to become, the longest in modern history, the worst housing run that most of us have ever seen. I think give it 4 months, and we will be inside the longest downturn on record, about 4.5 years. I think the old benchmark was a 5-year downturn in the 1970s. Now, in dollar terms, house prices nationwide, they are down 16% from the peak of the property market. If we adjust for inflation, they're down about 30% in inflation-adjusted terms, right? So we are right now back at mid-2016 levels when we're thinking about like house prices versus the price of everything else.
Is this going to be the Shares Academy podcast?
Well, I mean, just put it into context for us, because you've been in property a lot longer than me. You started in 2003, I think it was. So you went through the GFC. How does this downturn compare to the GFC?
It definitely feels longer. So the GFC was much sharper, but it was way shorter. So properties fell really fast, but then they bounced back over a couple of years. And it kind of feels like this one just won't end. And the last time we had this longer downturn was in the 1970s. And so it was way before I can remember, because I wasn't even born.
So one of the big questions people will have is, what could happen next, though? Because, as we know, assets are cyclical. So if you go through a major downturn, it doesn't mean like that's going to be what it is forever. Because if you think about the 1970s, well, that's the worst downturn on record at the moment. And then property did extraordinarily well over the next 50 years, right? But the question is, when might it bounce back? What might happen? And so what I've done is I've done the work for you. I went to all of the major banks and got their most recent forecasts for where they think house prices are going to go. So let's go through what they think might happen. If we are looking at December 2025 to 26, so the last half of the year, basically, most of the major banks are predicting not a hell of a lot. ANZ thinks that house prices are going to fall 2%, not from now, but since December 2026. ASB thinks nothing's going to happen, dead flat. Same with BNZ. Treasury and the Reserve Bank, they think kind of 2 to just under 3%. And Westpac, they're in the nothing going to happen club.
Isn't it amazing to think, okay, Reserve Bank, they're thinking kind of almost 3%, ANZ negative 2%. There's a 5% difference between those two.
Yeah, that's right. And if we think about the median forecaster, the median change is 0.15%. Now, the average house in New Zealand is $770,000. That's the median sale price. So if that was to go up by the median, 0.1%, it would be worth an extra $1,155 by December 2026, the end of the year. That is a total increase of not a lot. Not a hell of a lot at all, right? Now, the interesting thing is that these forecasts change all the time, right? So like ANZ recently cut its forecasts. Like I remember we had Sharon Zollner, their chief economist, on the show, and she was talking about how they just, I think, revised it up. Their house price forecast, like, yeah, we think house prices are going to go up a bit more. And then we had the oil price saga out of Iran, and now they've revised it down to that negative 2%. The Reserve Bank, as we said, is the most upbeat.
Now, one thing that's quite unique about this downturn is the number of houses that are actually getting transacted, they're actually being sold. Now, house prices and sales tend to move together. So if house values drop, people kind of hold on to their houses a little bit longer. They're like, well, I'm not going to sell it at a loss, or theoretically, or even a paper loss because it was worth more previously. Whereas this time, it's actually not the case. People are still actually selling properties. Maybe that goes to the fact that it's taken a bit longer. And so people have been holding on. They're like, I can't do this anymore. I'm going to sell. I'm going to go find somewhere cheaper somewhere else in the country. But if we look at actual sales at the moment, there are a number of properties actually selling at the moment. And we're basically at the long-term average. So house sales, the number of transactions, that's recovered, but the house prices haven't yet.
Yeah, I was recently on stage in Tauranga with Kiwibank's chief economist, Jarrod, Kerr, and we were both speaking. And one thing he did was pull up this chart, which you guys can see this. Even if you're on a podcast app these days, you can open up your app, have a wee look-see. We're there. You can see the video. You can see the graph. It's pretty cool. And he pulled up this specific graph now showing that house sales have recovered and are increasing like at a pretty good clip. But all of a sudden, over the last 5 years, that relationship has broken down. And one thing he said was one of these lines is wrong. Either we're going to see house prices go up or we're going to see the number of house sales transacting go down. And that eventually these two will start moving in concert together. But the COVID boom and bust has really broken it. And so one of these lines will be wrong and will revert at some point. We'll either see house sales come down or see house prices go up. It'll be one of the two.
So when he says wrong, he doesn't mean that this is inaccurate data. What he's saying is it shouldn't be like this.
Yeah, he's saying it shouldn't be like this. We should see house prices going up at the same time that we're seeing house sales go up. If we see house sales go down, we should see house prices go down.
But
right?
what's it going to be, Jarrod? Which one?
So if we look at the next year, though, so from December 2026 to December 2027, what are the banks forecasting for us? Well, after a pretty frosty 2026, ANZ thinks we're going to see 3% growth, ASB 2.9%, BNZ's a bit more optimistic, 4.5%. The Reserve Bank, again, the most optimistic at 5.7%, and actually, Treasury's up there as well. The median bank or median forecaster is saying 3.65%. Now, Andrew, if we apply that to the median house and say, okay, it ended 2026, let's say the forecasters were right at 771 grand, what do we get at the end of 2027?
Now, your end value at that stage is almost 800,000, 799. Your annual gain is 28,000. So that means your total gain, you're all in. So last year's growth and this year's growth, 29,000.
Even at 3.6%, it's actually pretty good.
Not bad, is it?
It's not bad all up. But what I really want to know is what happens a year after that. Now, just keep in mind that economists' forecasts are often wrong, right? There's a video on our YouTube channel, which maybe we'll link down in the description, where I got ANZ's forecasts and all of the bank's various forecasts, and I created a random number generator. There's a bit more math to it than that, but it was a random number generator. And I think my random numbers beat ANZ's forecast. Now, that's just because we went through a really rough period with COVID and things like that, which nobody had predicted. But it's just to say that it doesn't mean that these forecasts are going to be correct, but I like looking at them. I like sharing them because it gives you a sense of where lots of people's heads are at, right? And I would rather have a ballpark map of where the market might go rather than have no map at all and just be guessing. But if we think about, say, 2.5 years out, December 27 to 28, what are the banks forecasting right now?
Now, ANZ, but more bullish at this stage. They're saying 4%. ASB, hang on, you haven't got a number there, Ed.
There's no forecast. ASB don't release forecasts that far out.
Really?
And that's what we're going to see. Not every bank forecasts 5 years into the future. So they've started dropping off, at least in terms of the numbers that they release.
BNZ, they haven't got one. What about Reserve Bank? No one. Treasury, 4.3. Westpac 4.1. So, okay, so now your median's 4.1, but you've only got 3 to choose from, and your average is 4.13.
So let's apply that to the average property, which is now at this point with 799K. If that goes up by 4.1%, what's the average value of that house now?
Now you're at 832,000. So your total gain, again, your collective gain of the last 3 years is 62,000. Your gain for that year is 32,000 or 33,000.
And we kind of see the compounding effect here. Yes, you've got a slightly higher growth rate. House prices going up by 4.1% as opposed to 3.7%. But rather than making 28 grand, we've now made 33 grand if these forecasts were to be believed. And part of that is because your house is going up by more and more. So 4% next year is worth more than 4% this year because the house has gone up in value. It's a more valuable asset then.
And I think that's the thing that a lot of people kind of forget. Like they think about, okay, well, if I get some rubbish returns in the first couple of years, well, that sucks. But then they forget about, okay, when you get those small ones and you start to build momentum, you're getting gains on those gains over time. And because we don't know when those gains are going to come, you just kind of use some numbers that you're comfortable with.
Now, how much can you bet your house on this?
Ed was right before when he said that economists are wrong. Like forecasts miss a lot. In fact, even Ed, who never admits he's wrong, wrote an article once, economists wrong most of the time or something like that.
Yeah, no, it was economists often wrong, economist says.
Yeah.
That was the truest thing I ever wrote.
And look, I'll give you a good example. Early last year, ASB thought that, we're going to see 9% or even above growth in prices and values in 2025.
I think at one point Westpac was 10.7% as well.
And that hasn't happened. Prices end up roughly flat. ANZ's changed its predictions. They went from 5% down to negative 2%, so a massive 7% swing in the wrong direction, and just within a few months. And so again, this isn't to bag them because they're just using the data that they have at the time. I remember Tony Alexander on our show once saying, basically, you make all these forecasts and then something comes along that you didn't expect, and there'll be something else that we didn't expect.
I mean, how were the economists expected to know in January this year that Trump was going to bomb Iran?
Yeah,
right?
No one guessed that.
Nobody saw that coming, right?
Probably not even him.
Events just happen, right? And so you can't always forecast these things. Now, if we look out at year 4, what are we seeing?
Well, who's ballsy enough to have one? ANZ doesn't have a forecast at that stage. I can't imagine any of the other ones do that we didn't have before. Treasury and Westpac do 4.1. They're just copying and pasting at this stage.
They're saying 4.1% at that point, way in the future. So if our house was worth $832K, assuming it followed all these forecasts perfectly, what is it worth then?
Now your value is $866,000. Your total gain, all up, you're getting close to $100,000. You're at $96,000. Your annual gain for that year is $34,000. Again, more, even though it's the same rate as last year, because of that compounding effect.
Yeah, that's quite a lot. And again, the market is not going to work out like this, right?
No.
So it's not going to be exactly like this. But if it did, what would happen, right? Because going out and getting all of these forecasts and downloading the Excel spreadsheets and opening the PDFs and getting it into a document, it takes a couple of hours to do this the right way, right? And so we're just trying to shortcut the process and say this is where some of the country's biggest number nerds see the property market going. Do with it what you will. But just before we go into the last one, I had a really interesting conversation. Somebody reached out to me. I won't say who it is, but it's an investment professional from a company I really, really respect. They're a research firm. And he said to me, Ed, I'd love to catch up with you and talk about the modeling that you do and the numbers that you share on the podcast. And first of all, I was just humbled that he listens to the show. I was like, how wonderful. And he said, yeah, I'm starting to get interested in property again because back in 2021, I thought it was overvalued, so I didn't buy. Smarter than me. But now I feel like it's a time where I want to get back into the market. He's more interested in commercial, so we're going to meet up and talk about that. And the reason I share that is I was like, if somebody who's doing more research than I do, let's be honest, and somebody who's got a much, much higher IQ than I do is thinking about it, it kind of struck me that perhaps the tide might be turning. Now, nobody can accurately forecast 5 years out, but if we look at what's available, what are we seeing from Treasury and Westpac?
Okay, so Treasury, no, they haven't given one. Westpac, 4.1. Westpac are just copying and pasting now. They've just said 4.1. Which
for
I guess
3 years in a row.
Basically, they're probably just saying, well, that's probably long-term income inflation. And so I know there's a lot of conversations with DTIs now. Is that just the new norm? And so, some people are using that.
But let's apply it. Let's be consistent. If the house was worth 866K, what happens if it goes up by 4.1%?
Well, now you're at 900,000 and your total gain is 132,000. And so your annual gain for that year, again, the same rate, but it's gone up because you've got more valuable asset. Now you're 35.5 grand worth of annual gain. So again, that compounding effect, really, you can see it when you line it up like that. One thing as we're doing this that's really apparent to me is we're talking about averages. And the thing about averages is half the people are going to be disappointed. They're going to get less than that, and half the people are going to get better than that based on the way averages work. So I think it's going to become really important to choose your location well, because if you're choosing an area that's overvalued or you're choosing an area that doesn't have room to move, you're probably going to be really disappointed.
Yeah, I was just on News Talk ZB the other day talking to Jack Tame. They call me up on a Saturday morning to talk about money every couple of weeks. And one thing I was pointing out is that while national house prices are basically flat, Invercargill's up 20-something% from the bottom of the market. Christchurch is up something like 11%. There are places in the country where house prices are going up, but there are also places where house prices are going down, and that averages out. One way to try and get or attempt to get a better than average return is to choose a location wisely.
Yeah, and I think so often I'm talking to people at the moment and they're like, oh, that's going really well. I need to get into that market because it's going really well. And we did a podcast recently showing a Concilium had put out a report on, imagine if you went for the best ever fund that had got the best return each year and you flicked from from fund to fund to get the best return. The person that went to the worst fund for the 12 months prior, got more money at the end than the best fund because that you missed out on that return.
And I think the truth is with these numbers is that nobody really knows the exact number about how much house prices are going to go up next year. But the thing that really spoke out to me when I looked at these numbers was every serious forecaster is projecting some amount of growth from December 2026 onwards, right? So they all see the line going up rather than down from here.
So now you know where house prices could head, but not every area in New Zealand will recover at the same rate. So make sure you watch this video where I break down where house prices are going up and down right now. Click the video on your screen and I'll see you in there.